Gold under pressure this Thursday, but still looking for a fresh catalyst. Joining us from Chicago today is Phil Streible of RJO Futures. Phil, always good to have you on the program.
Thanks for having me.
So that catalyst doesn't seem to be the ECB announcement that interest rate policy remains unchanged as expected, right, Phil? So that didn't do much for gold. What does the metal need here?
No, yeah, we saw the gold and silver, they had pushed up into that number. The euro currency also was rallying quite a bit. There was a lot of expectations that the ECB, that they would come out with some fresh new stimulus here. It didn't happen, so we saw the euro currency start to sell off pretty quickly, boosting the dollar index. So you're seeing this kind of flight towards where there is some interest, interest being earned. So the U.S. still, is the leader here on raising rates. We saw the dollar index, it pushed up, the euro currency sold off. Gold and silver just tracked it lower. So no real fresh stimulus, not out of Bank of Japan either. So they're all the foreign central banks are all playing that same card.
All right, so let's talk numbers then. Gold came under moderate selling pressure. Does it need to break up through the 1355 level to bring in fresh buying?
Yeah, definitely. We've actually got to get just a little bit higher than that. I think it's got to clear some hurdle. It's got to be like 1360, 1365. Then we can get going. Then the floodgates open again. But it's unfortunate because the chart pattern that we're setting up here, we came off of those lows, down near 1300, push all the way back up 1358 or so. Now we're backing off a little bit. And I just hate to see this thing cycle lower, but it kind of seems like that's the plan right now. Hopefully we can hold around 1350 for a while and into next week to get things going again.
So Phil, what do you make of this first week of the month so far? Do you think next week we'll expect much more volatility with traders back at their desks and fully engaged?
Yeah, absolutely. I mean, you wouldn't believe how when volume slips off, and it's not just gold and silver, it's all the other sectors, everything that we're trading here, unless there's one big event under it. I think today was that ECB event with gold, but I'm not going to see anything here probably till Monday. Then we'll be fully staffed. The pits will be rocking and rolling again, and I think we're going to see volume come in, and gold's going to find that next direction.
Or we might just continue to see sideways trading until this month's Fed meeting?
Well, the thing is that I think that some of those other metals, the platinum and the palladium, we're really expecting, we've got our finger on the pulse of a potential labor strike going on back down in South Africa. That gets going again. I think that it's going to boost the morale of that entire sector, and I think we'll start to rally in it. There's also a lot of belief that next Fed meeting is really going to disappoint. I mean, we saw that miss on the manufacturing data. The jobs data isn't as strong as they'd like to be, and I think that they're just getting a little bit ahead of themselves. So I would expect gold prices to continue to rise, and I really don't think that next interest rate hike is going to take place until December.
Phil, thanks so much.
Yeah, thanks for having me.
And thank you for watching. Stay tuned and find out why our next guest says the Fed won't raise rates until 2020. Up next.